Welcome back to Starting from Scratch, my 8 episode journey created especially for complete novice investors. I'm Patricia Saylor, managing partner of Saylor Financial Fundamentals, and I'm excited to guide you through today's episode. We'll begin with Alyssa's story, a journey that may feel familiar to you, and by the end, you'll have a vocabulary list, review questions, and a homework assignment to reinforce what you've learned. Let's dive in. Alyssa was feeling pretty proud of herself. Her first good investing decision was holding on to the Coca-Cola stock gifted to her by her grandmother, but now she wanted to expand her investments. The idea of opening an account felt like a big leap, but she was ready to take it. Over the past few weeks, she had researched different online brokers, comparing them for user friendliness and how well they served beginners. With her choices narrowed down, she was leaning toward Charles Schwab for its highly rated platform, Thinkorswim. Still, the next decision loomed over her, choosing the right account type. Should she go with a regular brokerage account or start saving for retirement with an IRA? And if she opened an IRA, should she choose a Roth account or one that saved her taxes now? Alyssa kept reminding herself that this was a learning process. She wasn't afraid to take the time she needed, but she also knew that the sooner she got invested, the sooner her money would start working for her. Opening a regular brokerage account first, then maybe an IRA later, sounded like a good plan. After all, she could adjust as she learned more. Gathering the paperwork felt like a rite of passage. Her bank's routing number, her social security card, and even details about her employer were all part of her growing investment journey. Once the 2 micro deposits from her new broker showed up in the checking account, she confirmed the amounts and the connection between broker and bank was official. Alyssa moved funds to her new brokerage account, and her journey from novice to investor had truly begun. All she had to do now was figure out what to buy. Setting up your first account is pretty easy, but first you have just a couple of decisions to make. You must choose an online broker or brokerage firm and an account type. You can choose any reputable online broker, but I recommend you choose a big name that's been around for a while. At least as of 2024, Charles Schwab, Fidelity, and E-Trade are known to be beginner-friendly. And in case you're wondering, I'm not being compensated for any of these recommendations. Each online broker has at least one trading platform investors use for buying and selling stocks and trading options. The user interface for each trading platform is a little different. Some are very simple, and some have lots of features that you'll not be ready for at least a while, if ever. You should take a look at them and see which one you like best. If you think you will eventually want to learn to trade options, you may want to start with Schwab. Their trading platform, Thinkorswim, is highly rated by many options traders. It's also the one for my options trading video series, so if you watch those, it will be familiar to you. Choosing an account type can seem a little daunting, but it doesn't have to be. If you want to manage your own account, you'll probably be choosing one of 3 types: a regular taxable brokerage account, an individual retirement account, or IRA, or a Roth IRA. A regular brokerage account gives you the most flexibility to invest as much as you want and to withdraw your money when you need to. Contributions to a traditional individual retirement account, or IRA, can save you tax money in the year you contribute, but there are limits to how much you can invest in the account each year, and you may pay a penalty if you take your money out before you reach a specific retirement age. If you choose a Roth IRA, you don't get a tax break for contributions now, but you may save a lot more in taxes later. But again, there are penalties for certain kinds of early withdrawals and limits to your annual contributions. If you are not sure, or if you think you will need to withdraw your funds before you retire, just choose a regular brokerage account for now. You can always start moving funds to an IRA later. Once you have chosen an online broker and decided what kind of account you want, you can go to your broker's website and follow the instructions to set up your account. There is more information about account types in Appendix 1 of my ebook, or you can research them online. Now that you have an understanding of the stock market, you've chosen an online broker, and know what kind of account you're setting up, it's time to get started. Gather your information before you begin. Make sure you know your bank's routing number. You can probably find this online, or you can ask them for it, and the number of the checking or savings account you will use to transfer funds to your broker. You'll also need your social security number and the name and address of your employer. Once you open the account, your new broker will want to confirm that you are who you say you are. So in a few days, they will send 2 micro deposits to your bank account. To confirm your identity, you will log into the brokerage online and tell them the exact amount of the 2 tiny deposits. Once they confirm your identity, they'll take them back. Once you're confirmed, it will be time to send some money from your bank account to fund your new investment account. The money will show up as a cash balance until you buy your first share of a stock or an ETF or mutual fund. Getting your account funded takes a week or two, so you have some extra time to get prepared before you start buying investments in your account. I suggest you review the terminology we've covered to date, check out the review questions in this video and the previous videos, and do your homework to share in the comments. Then go ahead and watch our final episode, the 8th in this series. It will wrap things up with some important information about employer-sponsored plans, such as 401k plans, and give you some suggestions to continue your learning as you become a more knowledgeable investor. But for now, make sure you know these terms and can answer the questions that follow. If you're not sure about any of them, go back to the relevant sections of the video, or you can download a free PDF with definitions and answers by signing in to my website. Here's your terminology list: broker, trading platform, IRA or individual retirement account, Roth IRA, micro deposits, cash balance, ETF or exchange traded fund. Now for some comprehension questions. What are 2 things you need to decide on before setting up an investment account? What is the benefit of choosing a Roth IRA over a traditional IRA? How does the broker verify your identity after you've set up your account? What should you do while waiting for your account to be funded? And why might someone choose a regular brokerage account over an IRA when starting out? For your homework, I want you to choose 3 purchases for your account: a stock that pays a dividend, a stock that you think will grow in value, and an ETF. Check the share prices and make sure they fit into your starting budget. And in the comments, tell us what you have chosen and why. Drop me a message in the comments if you have any questions, and I look forward to seeing what you plan to buy. Don't forget to like this video if you found it helpful, subscribe to my channel for more tips on investing, and check out the links in the description to access additional resources.